Hi, everyone. I'm so happy to be here today on the Money Show talking about alternative investing. So, we're going to talk about a lot of things, but you'd have to be living under a rock not to know that Bitcoin just hit an all-time high. Gold is trading very close to its all-time high. Its little sister or little brother, silver, has actually outperformed gold this year. And of course, it's always wondering, can this kind of pace, stocks hitting highs every day, Bitcoin hitting new highs every day, can this continue? And are you late? Or should you bite the bullet and buy high, hoping to sell higher? Is there another strategy that you might consider? We're going to go over all this and much more on certain things where you might hedge against the US dollar. It's been quite strong against other currencies, as well as lean into the hottest industries. And of course, if we're going to talk about hots, even though it's not strictly alternative investing, we have to include artificial intelligence. And when we talk about hedging against the dollar, we have to include some of those strategies that are not that easy to find, but are definitely showing up in our email, BRICS currencies, etc. So let's dive in. So first of all, thank you again for having me today. I'm happy to be here. And I just want to remind you that the sixth edition of the ABCs of Money was just published as an Amazon exclusive. The easiest way to access it is always going to be to go to nataliepace.com and click on the book cover. Now, the reason I say this is that I actually cover um, everything that we're going to be talking about today in greater depth in the ABCs of Money. It was just updated 2 months ago. So if you are interested in alternative investing or diversifying in other countries or what's happening with BRICS, I cover that in the book. It covers debt reduction strategies, how to save thousands annually in your budget with smarter choices, stock strategies, fixed income strategies, all of this. It's all covered in there, including a lot of alternative investing strategies. So Bitcoin is at an all-time high. Stocks at an all-time high. Gold near its all-time high. Silver is still 38% lower than its high that it set in 2011, but it has had a strong rally this year, stronger than stocks, stronger than gold, but not nearly as strong as Bitcoin. We'll look at that chart in just a moment. But debt is also at an all-time high, and the dollar is still strong. So, a couple of other things we need to note are bonds lost more than stocks in 2022. So, what is the best strategy for 2025? And one thing I wanted to show you was just we're talking about hedging against a strong dollar. And as we can see here, the euro to the US dollar, you would have taken you $1.24 to buy a euro or $1.25 back in 2014. And right now, as you can see, you only have to pay $1.06 for a euro. So that's still a very strong dollar. All right, so let's dive into Bitcoin. And I wanted to show you that Bitcoin has more than doubled year to date. So that is dwarfing the returns of real estate, which is 3%, gold, which is strong at 26%, large cap stocks this year, again, another 26%. Inflation is low now in the last reading. And of course, as I told you, silver is slightly above gold and stocks at 29%. Now, this is what the 1 year return looked like last year. So it really looks like if you did not do Bitcoin, or if you didn't at least do a Bitcoin ETF, that you are out of luck. But the question is, can it go higher? And should you go ahead and figure out a way, like perhaps even dollar cost averaging into a small piece of your plan, the Vegas slice or the hot slice that we like to call them, is that a good idea? So we're going to look at a little bit more of what has been driving Bitcoin to be such a super performer. So the Bitcoin ETF definitely helped Bitcoin to soar in 2023 and 2024 because you can now own a Bitcoin ETF in your individual retirement account. You don't have to go over to have your own hard wallet or even, a trading service like Coinbase. You could actually buy an ETF on iShares. It is IBIT, B-I-T. And if you wanted the Ethereum coin, it's ETHA. So they're making it quite easy for people to own Bitcoin and Ethereum. These are the two ETFs that are offered. If you're seeing other ETFs offer other coins, be very careful because they may be undercapitalized fund companies, and the fund company themselves could get into trouble. So I would say one of the major themes of a world, especially a world like we're in today, where over half of the S&P 500 is at or near junk bond status, there's a great deal of debt. You want to make sure that the company that you buy your funds from has a very high credit rating and hopefully is publicly traded, so you can also check it out yourself and see if they're in trouble or not. So Bitcoin more than doubled and Ethereum is up 43.6%, but it is not at near its all-time high. So let's take a look at that because maybe one of the strategies might be to consider going with Ethereum ETF or Ethereum and dollar cost averaging in for your Vegas slice. So that's something that you could consider. So again, all we have to do is click on Ethereum so we can see, click on all so we can see the all-time high. And as you can see, the all-time high was over 4,000 for almost 5,000, right? And currently right now, you can see that Ethereum is trading at 3,280. It's still high, but it's not like Bitcoin, which is very, very, very close to its all-time high, right? All right. So let me talk to you a little bit more about what I mean of whether or not it could go higher. So the halving took place on the 20th of April this year. And a lot of people speculate that those halving events actually cause the coin to go higher. Now, this is what happened after each of the other halving events. And it is possible because we are about 6 months later, and the projection was that it would be at 115, and we've soared to almost 90. So it's almost there. And they're saying, okay, well, a year later, so April of 2025, they think it'll soar to 361. Now, I will say this is that it's important to know about crypto winters because even though we have seen these halving events cause Bitcoin to really soar, we've also seen that they can sink. So Bitcoin dropped to under 16,000 in 2022 after setting that 69,000 high on November 9th of 2021. So that's one of the reasons why we advocate that you put if you are going to have Bitcoin or Ethereum, that you put it into your pie chart. Always keep a percent equal to your age safe, overweight safe if you think that we have too much debt in the world or the markets are too expensive, and then diversify. We do 10 funds, small, medium, large, value, and growth, and 4 hot industries. And if you are really a Bitcoin lover, then okay, Bitcoin in all 4, but at least that is going to be an age-appropriate diversified plan as opposed to betting the whole farm on Bitcoin. The other important thing here is that if you have bought a slice of Bitcoin and it goes to the moon and you now have 4 slices, sell high. And that way, you keep some of that money. If it keeps going, great. But also if it doesn't, and if it goes into that crypto winter and you now have a sliver, you can buy low. And that's going to help the performance a lot because rebalancing your plan is a big important part of getting it right these days. So again, in 2018, it dropped all the way down to 3,000 after the $20,000 high that was set in 2017. So here we are at a new high. And again, if you look at past halving events, They are saying that it could go much higher by April of next year, but there is a warning that after that super high, we have seen the really, really severe sells. And by the way, it's all the whales of Wall Street. The average holding time of Bitcoin is 100 days. That's the typical holding time. So a lot of people think, oh, I'll buy it and I'll just hold it forever. That's a small minority of people who do that. Mostly it's a trading platform, and it's not really being used as a currency because you can't have a currency that's worth 70,000 or 90,000 one week and worth 15,000 the next month, right? That's you need your currency to be constant so that you know you can buy your bread with it. The only people that are really using these as a currency are in the black market or criminals. So also, I think it's important that we separate Bitcoin and Ethereum from the FTXs of the world, because as you can see here, they make it look very legitimate. Kim Kardashian, she promoted a pump and dump crypto scheme that said it was Ethereum Max, so it sounded really legit. As you can see, FTX was promoted by even Major League Baseball, Tom Brady. So you need to be aware of the fact that if you're getting approached by whomever about a new coin opportunity or an ICO, or this is going to shoot the moon and you got to get in now or you're going to lose out. Those are all hallmarks of pump and dump schemes, even if they are promoted by celebrities or billionaires or whatever it is. They may be, and many people are these days. Influencers are definitely paid to promote. So be careful of this. So again, should you wait for Bitcoin to hit 361,000? Should you buy, sell, or hold on for dear life? Which ETF, which wallet? Again, in a half-hour session, I don't have time to go over every single detail with you, but we spend a lot of time on it in our retreats. It's definitely mentioned in the book. And you can also email us at info@nataliepace.com, because I did publish a recent blog on the topic and it addresses all of these issues. So just email us and I'll give you the blog at minimum. That's free. info@nataliepace.com. Now, this is what a sample pie chart looks like if you're 30 years old. Again, keep a percent equal to your age safe and know what is safe, because a lot of people lost a lot of money on their bonds. And bonds are not supposed to lose money. Typically, if you ask to be conservative or safe, they're going to put you in bonds, and they're tricky because there's too much debt in the world. There's duration risk and there's credit risk. So even though we have no more interest rate risk because interest rates are expected to fall, the other two things are heightened and they are causing the problem. So again, bonds lost more than stocks did in 2022. They didn't make them up last year. They didn't make it up this year. So it's super important that you guys know what is safe. But here's also what I wanted to show you. So getting 10, diversified into 10 funds, that's very diversified. So do you want one hot slice of Bitcoin or Ethereum? 2, 3, 4? Don't make it the whole at-risk side, and certainly don't make it the entire pie chart. So again, which coins? You can learn more in my blog, and email info@nataliepace.com and ask for the crypto blog, and we're happy to send it to you. Just as a reminder of the cycle of investor emotions, like everybody is wanting to get in on stocks. Everyone wants to get in on Bitcoin right now, right? Because it's trading at an all-time high. So what I would say is that if you don't have it, instead of just, first of all, make sure you do that sample pie chart. And I have a free web app where you can mock up and personalize your own sample pie chart. Make sure that you are looking at an age-appropriate diversified plan and that you're considering a hot slice, or I'll call it a Vegas slice, something that you really think could shoot the moon, right? But rather than just buy and fill up that whole slice, consider dollar cost averaging. And that way, if the price goes down, instead of losing money, the next dollar cost averaging time, you're buying more at a lower price. And if the price keeps going up, then it's filling up the slice for you. So dollar cost averaging with an age-appropriate diversified plan is going to protect you from the cycle of investor emotions, where most of the time we're doing exactly the opposite of what we should be doing. Again, euphoria is when maximum risk, and maximum opportunity is when you just think that everything is going to be the apocalypse and you don't want to. That's why the prices go low. So what about gold and silver, right? First of all, don't miss my interview with gold veteran Rob McEwen on November 21st, 2024. If you'd like to join us live, email info@nataliepace.com. You can also subscribe at youtube.com/Natalie Pace to watch it back. Now, Rob McEwen is one of the most respected gold veterans in the industry. He started out at Gold Corp. He took it from a micro cap to worth over $18 billion. And he decided to do it again with McEwen Mining. Now, the interesting thing is that he has gold, he has silver, and he also has McEwen Copper, of which McEwen Mining has about 50% stake in it. So we're going to also talk a little bit about copper. But again, this is something you could think about. Now, if you're going to just invest in McEwen Mining, it's a small cap. It's actually a micro cap right now. So you're definitely taking on higher risk for higher gain. And anytime you do invest in an individual company like that, you have to babysit it. So you have to know what the forward outlook is going to be. You have to know what are the headwinds, or when is the wind going to be at the back of the company. Certainly with copper prices high, gold prices high, and silver prices starting to climb, that is all positive for McEwen Mining. He believes that his company is very undervalued right now. So you can listen to him in my interview this month. Be sure to email us at info@nataliepace.com if you want to join us live, and watch it back at youtube.com/Natalie Pace. So again, silver is up 29.2%, and that's slightly higher than stocks and gold. But again, Bitcoin is the story. Now, what about artificial intelligence? It is definitely the hottest industry in the world, but should you buy high, hoping to sell higher? Is that going to be a challenge and a problem? Now, I want to show you this, and you can email me for this artificial intelligence stock report card. It was updated just a few weeks ago. And what we see here is that with the semiconductor chip industry, it's a tale of two cities. So you see something like super microcomputer that is year-over-year sales growth even above where NVIDIA is, right? But why is it then that this company is trading so far down from its 52-week high, whereas NVIDIA keeps setting new record highs, right? And also, why is it that Intel is doing so poorly and just got booted out of the Dow Jones Industrial Average? Now, I also have a blog that talks about that. So again, you can either go to nataliepace.com/blog, or you can email us so that you can get access to that blog. So this is the blog. The chips are down, ASML, Intel, and supermicrocomputer plunge. What about NVIDIA? So it is a tale of two cities, and you want to know the difference between the two, especially if you're trying to play it as an ETF. And again, with NVIDIA, which has become the most valuable company in the world, it's now worth about $3.7 trillion. I just want to remind you that this is all of the growth is baked into the price. It's a very expensive stock. So if you want to own it, there's a couple of ways that you could think about playing that. You could think about a breakthrough technology and artificial intelligence ETF like TECB that's offered by iShares, which is owned by BlackRock, and that has a decent a credit rating, and it also is publicly traded. Or you could think about ARTY, ARTY, which is the artificial intelligence ETF there. Both of them have a lot of NVIDIA in them. If you want NVIDIA itself, Or if you would like one of those ETFs that also include the Magnificent Seven, again, consider dollar cost averaging instead of just filling up the whole slice at the all-time high, because we have seen the markets get very squirrely, right? Like something bad can happen and they can drop precipitously, creating a buying opportunity, which would be more exciting than, oh my goodness, I bought high and now I've lost, 10 or more percent. So again, you can email us at info@nataliepace.com to receive an AI stock report card. And here's a sample pie chart if you are 50. Now we're overweighting an additional 20% safe, and that's also a way of hedging against expensive stocks, massive debt, and potentially what if the dollar becomes a little weaker? So that is a good way to do it. Just act a little bit older. And again, the key here, we're not talking about in today's seminar, but we can talk about it. Definitely, we spend one full day on it at our retreat. What is safe in a debt world where bonds are losing more than stocks? This is a biggest slice of everybody's pie. So we definitely want to get that part right. What about BRICS? And this is one thing I would be careful of. Again, I do have a blog that addresses BRICS as well. So we want to definitely look at that, right? So, and we also have a rebalancing blog. China and Russia have definitely more than doubled their gold holdings since 2014. They are definitely trying to break the dollar's preeminence in the world, and definitely with regard to oil. So China and Russia are trading in between those two countries using the yuan, and they're trying to back it as much as they can by gold. So that is absolutely true. But does that mean that you should jump into some sort of BRICS token? Be very, very careful here. First of all, it's hard to do it with a credit-worthy company because you're just not going to find a BRICS ETF on iShares. And you're not going to find it on Coinbase. You're not going to be able to trade it there. So again, this becomes super high risk, right? It is new. It is a newer thing. It's not very widely held. It's very thinly held. It's a very small piece of the world's currency. They, of course, have a goal to make it a much bigger piece. But we don't really live in a buy and hold world anymore. It's too volatile. We saw that stocks dropped over 40%, well, almost 40% in 1 month in the pandemic. The Dow dropped 55% in the Great Recession. The NASDAQ dropped 78% in the dot-com recession. So, rebalancing and being age appropriate and having that diversified plan is a better strategy than buy and hold. So thinking, oh, I'm getting in on the bottom of BRICS and I'm going to hold it, there's going to be a great deal, even with Bitcoin, right? Like 1 year you could be worth $1 million, and the next year you're worth $180,000, and your credit score plummets. And if you bought something based on being a millionaire, you're really going to be in trouble. So again, be age appropriate and properly diversified. So what about other countries? And that's another way that we can actually hedge things a little bit. So as you can see, Australia, a bunch of companies are rated higher than the US and Canada. And oftentimes with Australia, you're getting a higher credit rating and you're getting a higher yield as well. So that's one of the things that we talk about in our investor and financial freedom retreat is particularly of interest to us are Australia and also Peru because of copper. And copper is been called the new oil by Goldman Sachs because it's essential for all things energy and definitely clean energy, but even all things energy. It's used in EVs, and those are definitely on fire, particularly in China. So I just want to let you know that our strategies, again, are easy as a pie chart. They are enthusiastically recommended by Nobel Prize-winning economist Gary Becker. They work. So again, be sure that you take our investor IQ test, our rebalancing IQ test. You can personalize your own sample pie chart. using our free web apps. Just email info@nataliepace.com. We're happy to send you, say, put free web app in the subject line or investor and rebalancing IQ test in the subject line. Also, you can join us at our next retreat. It's going to be January 10th through 12th. It's online, so you can join from anywhere. And remember that you're going to get the best price if you register by November 15th. Now, we spend a full day on what's safe, a full day on what's hot, including a lot of alternative investment strategies, and one day on your nest egg and how to properly diversify it and why rebalancing is so important. We call it the life math that we all should have received in high school and college, and we have a lot of highly educated people who have in the past perhaps let others manage their money. And then maybe they're looking and saying, well, why is the safe side lost 26%, which is what bonds lost in 2022? Or they're saying, why isn't my portfolio performing 26%, which was the returns last year and this year in the S&P 500? So again, rather than getting, salesman type answers, why not be the boss of your money and learn what's hot and learn what's safe? You don't have to self-direct it if you don't want to, although if you only have 10 funds and you're rebalancing once, twice, or 3 times a year, it's actually quite easy to self-direct it. But be the boss at minimum and know what you own and why. And it's always a great idea to fix the roof while the sun is still shining. Stocks are high, Bitcoin is high, everything's high. Let's keep some of that wealth. Let's capture those gains. So again, email info@nataliepace.com. And I just wanted to let you know that this system is so simple that this couple actually earned gains in the Great Recession, while most people lost more than half, right? Now, how does that happen? Well, let's go back to this sample pie chart of the 50-year-old. If you're 50 and you're overweighting safe, which we're doing right now based on market conditions, then you only have 30% at risk. If 30% loses half, that's more like 15% losses. And if you're earning gains on the safe side and not losing principal, then that might make up for everything that you might lose on the at-risk side. Now, bonds were doing great in the Great Recession. They were doing fantastic in the dot-com recession. They're a little problematic today because of that duration risk and the credit risk. So again, join us at our January New Year, New Me Financial Freedom Retreat online. You can attend from anywhere. Best price by November 15th. Visit nataliepace.com. Email info@nataliepace.com. And thanks again for joining me today. And thank you, Money Show. Love coming on.